the Federal Reserve. It seems like they are in control. They are the driver of good times. They're the driver of bad times. And everything is one trade. If the Fed says we're going to pump liquidity, get long and shut up and let them just do their thing. If they say they're going to pull the liquidity away, basically get out of the market, it seems like. Is that a fair categorization of what the Fed's role in financial markets is today?
They're not in control of anything, but certainly in the short run, the markets trade off of the Fed and what they believe the Fed is going to do. And I think the Fed still has a large degree of credibility. Why? I have no idea. Maybe because the people following the Fed are just as clueless as the Fed. So when the blind, is leading the blind, the blind that are following along, have no idea that they're following somebody who also can't see. But reality is going to rear its head, and it may have already done so, at least beginning. I mean, I'm looking at the markets the last several days. We've seen some pronounced weakness in the dollar finally. I mean, today is one of the weakest days in several years for the dollar. Who knows? It might end up being the weakest day of several years. We'll see. Gold is starting to pick up. I mean, nothing explosive, but we were below 1,800 a few days ago, now back at 1,850-ish. And so even as the stock market is going down, and what I am thinking is that the markets are finally starting to look beyond the tightening cycle to the next easing cycle. Yes, the Fed is talking about how this super strong economy can withstand higher rates, but meantime, this super strong economy is probably already in a recession. And we're not only just in a recession, we're in a worse recession than what we call the Great Recession that we had following the 2008 financial crisis. And remember, we were 6, 7, 8 months into that recession, and they still denied that we were in one. In fact, they said there was no recession anywhere in sight, and we were in the middle of it. And so I think they've made the same mistake again in overestimating the strength of the economy. They think consumers spending money is economic strength. It's not. It's a reflection of inflation. And the economy is actually very weak beneath the surface. But when you look at the news yesterday from Target, from Walmart the day before, and now, Cisco's news today, you can see that we're collapsing into recession, that higher prices are taking a toll, as are higher interest rates on the consumer's ability to keep on spending. And unemployment is going to follow. I mean, look at today, unemployment claims jumped to a 4-month high. I think we've already turned the corner, and we're very close to a major spike, I think, up in unemployment. And so that whole myth about this strong labor market is going to die. And I think the markets are now pricing in the fact that the Fed is going to be recognizing that the economy is not as strong as it thought. And it's going to indicate that it's not going to raise rates as much or as quickly as it once believed.
So when you think about this, let's talk about the idea of this recession. We obviously saw the Q1 contraction. I think it was minus 1.4% annualized of GDP. Do you expect Q2 to be a contraction as well? And should we expect GDP to contract through the end of the year? Is this like a just get 2 quarters of it? What is the GDP expectations that you have through the end of the year? Let's start there.
Well, I think it will be another negative print. So we won't get that until, August or July? July, we get the numbers or something like that. But I think there's a good chance that we'll get a negative print. I thought there was a good chance we were going to get a negative print in Q1. Very few people believed that, and we ended up getting one. And I think if we avoid one, it's probably because they understated inflation, because they always have to use a deflator to take the nominal GDP and make it real. But if they're not using a big enough deflator because they're understating how much inflation has pushed up prices, then they can kind of create the illusion that a contracting economy is growing. But I think, we're in recession, whether it is officially revealed by the numbers or not. But I think it's going to happen. And then, the Fed's not going to fight inflation when we're in recession, because all the Fed's tough talk about we're going to do whatever it takes, it's all predicated on this super strong economy and red hot labor market that can withstand doing whatever it takes. Powell has never acknowledged his willingness to continue to fight inflation if the economy is in a recession. I mean, he's been asked that question, but he's never answered it. He always is very evasive and just changes the topic. But I think that if you kind of listen to his praise for Paul Volcker, he is always, specific to make sure he has never praised Paul Volcker for raising rates and pushing the economy into a recession to fight inflation. He has always qualified his admiration for Paul Volcker by saying, I admired the fact that he did what he thought was right. That's all he's willing to give Volcker credit for, is doing what he thought was right. Now, maybe he didn't think that was right. And I think when push comes to shove, when he has to make a decision between stimulating the economy because it's in recession or fighting inflation, he will not make the mistake he will not make the same choice that Paul Volcker made. He will make a different choice because he has a different set of beliefs. Yes, he thinks inflation's a problem, but not as big a problem as unemployment and a weak economy. And I think he will, ignore the inflation problem, which means it's going to get so much worse, which also means the economy is going to fare much worse because inflation is going to decimate it.